As you may know, my name is DJ Bettencourt, your friendly neighborhood commissioner of the New Hampshire Insurance Department, and it is my pleasure to welcome you to our department's annual hearing on health care premiums and claim cost drivers. This is our big yearly event, and for my team, I know that the excitement is palpable and the spreadsheets and graphs are pristine. First, I want to extend my gratitude to everyone who has joined us this morning, both in person and remotely. We're thrilled to share some fascinating findings from several key analyses using some of the latest healthcare data available. Trust me, it is a lot more interesting than it may sound. Our goal this morning is to help inform New Hampshire's legislators, policymakers, industry leaders, advocates, and consumers alike. We respectfully ask that those of you with us today to please do your part to disseminate this information to the widest audience possible. I think if we all work together to get this information out, it will do a great deal of good to fulfill my goal of increasing what I like to call insurance literacy. Additionally, we hope that our findings will be appreciated by these and other thought leaders for the utility in providing sound, comprehensive, New Hampshire-specific health data reporting to help inform the policies that we will consider going forward. My team is proud of the legacy the Insurance Department has built in our commitment to disseminate useful information and accurate information, always with a priority on transparency, especially given the complex nature of insurance. Now let me take a moment to introduce some key members of my team who are here today. We've got more team members than usual, I will say. And I'll sprinkle out the introductions throughout the morning so we can keep things moving expeditiously here. Let me be clear, I can take very, very little credit for the hard work over many, many years that has earned this department its outstanding reputation. As I like to say, to the extent that I don't mess it up, that is my personal definition of success. So first and foremost is our Deputy Commissioner, Keith Nyan. Next to him is our Assistant Commissioner, Jason Dexter, kind of going somewhat zigzag. Michelle Heaton, the head of our Life and Health Division. Tori Fowler, the head of the Compliance Unit there. A very familiar face to all of you, Alex Feldavel, our jack of all trades. I can never exactly get his title correct. Dr. Jason Azes, the head of our Data Analytics Unit. And we've got others, but we'll sprinkle them out throughout the day. And of course, we've got Andrew Demers and AJ, who have done a phenomenal job of coordinating the logistics of the event tonight and making sure that we are offering this presentation remotely as well, so you can all go back to it later or share it with friends who may not have been able to join us. Before I turn things over to the team at Oliver Wyman for a deep dive into the data and analysis, I want to set a positive tone. I'm pleased to share with you that in recent years, New Hampshire has been recognized for offering the lowest average monthly health insurance premiums in the country. The most recent report conducted by Wallet Hub finds that not only does New Hampshire boast the lowest average health insurance premiums in the country, but we also rank 5th among states with the best health care systems, which is truly a double win in the sense that we have premiums that are affordable, but we have access to some of the best health care providers in the nation. This report aligns with similar findings we've seen before and certainly does not stand alone. This particular report compared 44 measures of cost, accessibility, and outcomes, all of which underscore the vital importance of balancing affordability with quality. And what makes these findings particularly impressive is that while healthcare costs continue to rise nationwide, New Hampshire stands out for making health insurance accessible without compromising the quality of care that patients receive. And let's not forget that we are living in an area of the country, a region of the country, that is notorious for having high healthcare costs. So, what does this success look like? How are we managing to pull this off? to shed some light on these details. We're thrilled to be joined once again by the team at Oliver Wyman, and specifically Jenn Smagula, who I believe is going to be leading her talented team in their presentation this morning. Jenn is a principal at Oliver Wyman Actuarial Consulting based in Boston. She joined the firm last year after spending 13 years as an independent consulting actuary, and she brings with her more than 25 years of health care actuarial experience. Jenn specializes in providing strategic actuarial consulting to health plans, state agencies, and insurance regulators. We are immensely grateful for the close collaborative partnership that our department has enjoyed with Oliver Wyman over the years, and we eagerly look forward to today's presentation. So Jenn, the floor is yours.
So I'm Jenn Smagula. I'm a healthcare actuary with Oliver Wyman Actuarial Consulting, and on behalf of my colleagues, I'm going to take everyone through this year's presentation on the key findings from our 2024 preliminary report on New Hampshire's healthcare premium and claim cost drivers. So the goal of our report and presentation is to examine health insurer premium and claim costs and the factors contributing to changes in those costs. This year's focus is on 2023 data, but I'll also be presenting some early information from 2024. So I wanted to start off and just share our key findings from this year so that you can be more aware of them as I go through the presentation, and we can also review these again at the end of the presentation. But first off, the individual market has continued to experience significant increases in enrollment continuing into 2023 and then further into 2024. So this is driven by several factors. One is the changes in the Medicaid eligibility determination, the expanded premium subsidies for qualifying individuals, and New Hampshire's individual market reinsurance program under the Section 1332 waiver. Now, small group enrollment has continued to decline at a gradual pace, and as of April of 2023, small group enrollment is less than the individual market enrollment. Now, when looking at total medical expenses and the trend, in the fully insured market, we saw a trend of 6.7% from 2022 to 2023, and this is after a nearly flat trend from 2021 to 2022. So this was predominantly driven by increases in cost and mix. Trends in 2023 increased compared to 2022 across all medical service categories, with outpatient facility being the largest contributor to that growth. Inpatient and outpatient facility and professional payment rate changes were higher in 2023 compared to prior years, but they're projected to come down in 2024. And lastly, insurer risk margins were lower in 2023 compared to 2022. These next couple slides look at some comparisons between New Hampshire and the U.S. and other New England states. So the uninsured rate in New Hampshire has decreased over time, up at 6.3% in 2019, down to 5.1% in 2021, 4.9% in 2022, and currently landing at 4.7% in 2023. Now, the United States average uninsured rate, which is shown in the dashed black line up top, has also been decreasing. It started up at 9.2 in 2019, and it's down to 7.9% in 2023. So this chart also shows the other New England states and their uninsured rate. And when comparing New Hampshire to other New England states, New Hampshire's uninsured rate is slightly above the median in 2023, with Massachusetts having the lowest uninsured rate and Maine having the highest uninsured rate among the New England states. So this slide gives an overview and provides directional information on where New Hampshire residents received their health insurance in 2023, and it's based on information collected from the American Community Survey. So as we reviewed on the previous slide, the uninsured rate in New Hampshire is around 4.7%, so that's that bright green piece of the pie, rounded to 5%. So of the 1,386,000 New Hampshire residents, this translates into about 66,000 New Hampshire residents not having health insurance. Approximately 62% of residents in New Hampshire receive their health insurance through the private commercial insurance market, either through their employer, which is shown in dark blue, or by purchasing their own insurance coverage, which is shown in the light gray. And after the employer coverage category, Medicare coverage is the next highest bucket in the bright blue, and then followed by Medicaid at 9%, which is the dark gray. So now these next couple slides compare New Hampshire average premiums to the average premium of New England states and to the US average. So this first slide looks at the individual market, and it uses publicly available data from the CMS risk adjustment reports. Average premiums in the New Hampshire individual market decreased about 15% from 2020 to 2021, and then we've seen fairly slight increases going forward to 2023. Now, the decrease in 2021 is primarily due to the Section 1332 waiver state-based reinsurance program, which began on January 1st of 2021. Now, across the United States, the bright blue line, the change in average premiums was fairly flat from 2020 to 2021, and there's just been some small increases going forward. And when comparing New Hampshire to the average from other New England states, which is shown in the gray line, New Hampshire's individual market premiums have remained lower than the New Hampshire average, and that gap has widened over time. Now, note in this chart, the New England average only includes 3 states, Connecticut, New Hampshire, Rhode Island, because the other states had a merged market at some point during this time frame. Now, average premiums will vary by state for several reasons, including differences in plan design, differences in morbidity, network and reimbursement differences, and then the presence of a reinsurance program or not. Now, this slide takes that same information from the public CMS risk adjustment reports and now looks at the small group market. So New Hampshire small group market premiums, the dark blue lines, continue to remain close to the U.S. average in 2023. And average premiums increased in New Hampshire's small group about 5.7%, and in the U.S. they increased about 5.6%, so very similar from 2022 to 2023. The average premium in New England, the gray line, increased about 5.3% during the same time period, and the average New Hampshire premium continued to be lower than the New England average, and they're about 10% lower in 2023. And when looking at the rank of the small group market across all states in the U.S., New Hampshire is about the 22nd highest. And this is very similar to where they ranked last year. So now this next slide takes a look at comparing average premiums in the large group market in New Hampshire to the U.S. and other New England states. So the CMS risk adjustment program does not apply to the large group market, so we don't have that same data available to us. So here we're using data from the Medical Expenditure Panel Survey, or MEPS. So similar to the previous slides, United States average is shown in the bright blue. New England, the median is shown in the gray, that gray line, and the New Hampshire is in the dark blue bars. So this shows that in the large group market, New Hampshire has consistently had higher premiums than the U.S. average. And when compared to the median of other New England states, the relative position has changed over time, but in 2023, New Hampshire is just slightly above the New England median. So now we're going to move on to talking about enrollment and coverage shifts. And here in this first slide, we're looking at health insurance enrollment by market segment, by insurer, and by some of the shifts that we're seeing over time. So this slide gives an overview of the New Hampshire Citus commercial insurance market from 2020 to 2023. And by situs, we mean that the employer's health insurance is contracted in New Hampshire, and this typically means that the employer is headquartered in New Hampshire. And by commercial, we mean that people are purchasing insurance on their own or they're receiving coverage through their employer. The gray bar in the middle shows the proportion of membership within each commercial market segment in 2023. So similar to prior years, about 87% of the commercial coverage was purchased or received through employer-sponsored insurance, or the ESI. So this includes the small group market, the large group insured market, and the large group self-insured market. And also note that over half of the commercial market, or 55.4%, are enrolled in large self-insured groups. Now, the NHID does not have jurisdiction over these self-insured plans. It only has jurisdiction over the fully insured plans, so that's the 219,000 members represented by those three top bars. Now, the right-hand side in color shows average enrollment by market segment for each of the past 4 calendar years. So looking at the top with the individual market, we've seen the number of individual members increase each year from 2020 to 2023, and that segment's gained about 14,000 members during this time period. So we're going to take a closer look at what's going on in the individual market in some subsequent slides. And then we have the small group market, where we've talked about we've seen some gradual declines in that segment over time. We have the large group fully insured segment. We've also seen some gradual declines in that segment. And lastly, the self-insured segment, which has bounced around a little bit, but in the past 2 years, they've gained about 8,000 enrollees. And some carriers noted that they are seeing a shift among their groups, shifting from from fully insured coverage to self-insured coverage. And overall, in this commercial segment, we have about 492,000 members, which is a little bit higher than last year. So these next 2 slides just drill a little bit into what's happening with 2 of the market segments from a carrier market share perspective. So the pie chart on the left is 2021, and then we have 2023. So Anthem Matthew Thornton's market share, which is in dark blue, has significantly increased from 21 to 2023. They've gone from about 49% market share to 67% in 2023. During this same time period, Ambetter's market share, which is shown in bright green, they've lost market share for the first time in recent history. And then also Harvard Pilgrim has lost market share. They're shown in the bright blue. Now, individual market customers, along with the small group market, tend to be very price sensitive. So as premium rates change and competitive positions among insurers change, that's going to lead to these shifting among insurers and the shifting in market share. Now, this slide drills into similar information, but for the small group market. So in 2021, we see that United Healthcare Freedom Plan, which is shown in the light gray, had about 15% market share. That has decreased to 7%. Similar to United Healthcare Freedom Plan, we also saw a decrease in Harvard Pilgrim's market share. And then during the same time, Anthem Matthew Thornton picked up that market share and have moved from 47 to 61%. So up to this point, we've been looking at a lot of data through 2023, but this slide now takes us into looking at what's happening into early 2024. So overall, fully insured enrollment has increased going into 2024, really driven by increases in the individual market, partially offset by some decreases in the group markets. So here, going from April of 2023 to April of 2024, we see an additional 12,000 enrollees coming into the individual market. And then we see a decrease of about 2,000 enrollees in each of the small group and large group segments. So now we're taking a deeper dive and looking more long-term at what's been happening in the individual and small group markets. So through the annual hearing data collection process, membership is now collected as of April, July, and December of each year. So each dot on this chart represents a data enrollment point. Small group market is shown in the bright blue, and the individual market is shown in the dark blue. Between April of 19 to July of 2024, small group enrollment has declined about 14%, losing a total of 9,000 members. And then when you look at the individual market, you can see it's a little more volatile. And prior to 2021, we would typically see enrollment decrease slightly throughout the year. But starting in 2021, we see that pattern change, and there's been more of a steady increase. So a couple things that happened in 2021, some of which we've already mentioned, but first off, we have the introduction of the reinsurance program in 2021, so that helped lower premiums in the individual market. Secondly, we have the American Rescue Plan Act in 2021, or ARPA, so that expanded eligibility for premium subsidies, and it also increased subsidies for those who already qualified. And these subsidies have been extended into 2023, 2024, and 2025 through the Inflation Reduction Act, or the IRA. And lastly, we also saw there were some special enrollment, extended special enrollment periods that happened during this time, so that brought in more members throughout the year. We also see this significant increase in enrollment into 2023 and then further into 2024. And the individual market is now at close to 76,000 enrollees as of July of 2024. So in addition to the enhanced subsidies and the reinsurance program, New Hampshire restarted their Medicaid eligibility determinations in April of 2023. So this is also contributing to the increased enrollment in the individual market, and that continued through the open enrollment period in 2024. So for the first time, if you're looking at April 2023, we see the enrollment in the individual market has surpassed the enrollment in the small group market. Now, we did ask some of the carriers who participate in both these segments if they noted any shifts between from small group to individual market of their membership, and they said they saw some shifts, but that's not a driver of what's happening. Now, this slide goes one step further and takes the individual market and breaks it into 4 categories. The non-exchange, which is in dark blue, the bright blue line, which is folks on the exchange but are not eligible or not receiving any subsidies. The light gray line are exchange enrollees above 250% of FPL. So these are folks who are eligible for advanced premium tax credits, or APTC. And then the dark gray line are exchange enrollees between 138 and 250% of FPL. And those enrollees are eligible for both APTC and cost-sharing reduction subsidies, which helps reduce the cost sharing that they pay out of pocket. So a couple things that are happening again. We know New Hampshire introduced their reinsurance program in 2021, and this lowered premiums. So we see there the non-exchange, the dark blue, increased in enrollment, and the bright blue, these are non-subsidized folks on the exchange, also increased enrollment. So these enrollment changes were most likely due to the reduced premiums from the reinsurance program, as those are the folks, they're not receiving any subsidies, so they really receive the full benefit of having a reinsurance program. Now, New Hampshire also experienced an increase in their subsidized populations in 2021 into 2022, and that's most likely due to all the enhanced subsidies that came into play with ARPA and the IRA. And then lastly, when we look into 2023 and 2024, that's where we see Medicaid eligibility redeterminations happening, and you see an increase in those 2 gray lines, the subsidized population. So this slide is interesting because you can see how all these different policy changes are really directly impacting enrollment in this segment. So this side now looks at same time period, but looks at the large group fully insured, which is shown in the bright blue on the bottom, and the self-insured segment, which is shown on the dark blue. So the large group fully insured, like we've mentioned, they've had kind of a gradual decline as well, losing about 13% of their enrollment over this time frame. The self-insured segment up above, it's bounced around a little bit, but they've generally seen some increases in these segments, and they've grown about 8,000 members from April 19 to July of 2024. So in addition to some carriers noting that there does seem to be some shift going from the insured segment, the large group insured, to the self-insured segments. Some carriers noted that they're just seeing their current groups also growing in size and adding members. This enrollment slide now looks at, up on top, the total of the New Hampshire commercial situs population. And then down on bottom, it's the Medicaid and the individual market. So the total commercial enrollment, which is shown up top, that's the combination of these four segments we've been talking about: the individual, small group, large group insured, and self-insured. And then down on bottom, the individual market, which is shown in the dashed line, that's a subset of that commercial population up above. And then we're showing the two Medicaid segments, the standard Medicaid program and then the Medicaid expansion program. So from 2020 to 2022, we see in commercial enrollment up on top a slight decline, while the Medicaid enrollment has increased. And then we see this reverse starting to happen in April 2023, where the Medicaid enrollment has started to decline, and the commercial enrollment has started to increase. So as we mentioned, during the COVID public health emergency, Medicaid redetermination was paused. So you're only seeing that increase in Medicaid. And then when the public health emergency ended in April of 2023, you see the disenrollments happening in Medicaid and some increases in the commercial segment. The other thing to note here is that you can see, like, once we get into April 2024 and July 2024, that Medicaid enrollment has started to stabilize. So while the Medicaid re-enrollment process, or the redetermination process, was ongoing in 2023, it seems to have completed by now that we're in early 2024. Okay, now we're going to look at medal distribution for a couple different segments over time. So this first slide takes the New Hampshire Individual Market Exchange membership, and it examines their medal level for 2022, 2023, and 2024. The medal level represents a plan's actuarial value or benefit richness. So generally speaking, bronze plans are going to have lower premiums but higher cost sharing, while a gold plan is going to have higher premiums but lower cost sharing. So for members on the individual market exchange, there was a shift away from bronze and silver, and these folks seem to have shifted into more richer gold plans. So from 2022 to 2024, the percentage of enrollees in gold plans increased about 8 percentage points, so that light gray bar at the top. So this is most likely due to a couple things, including all the enhanced subsidies that came into play with ARPA and the IRA, along with the continuation of the reinsurance program. So these additional reductions in premium have allowed some enrollees to purchase more comprehensive coverage by moving into these gold plans. Now in the non-exchange segment, we saw a somewhat similar shift. We see people moving away from bronze and silver to gold plans. We see a shift of about 12 percentage points or increase in the gold plans during this time. So again, these people are most likely due to the reinsurance program. These folks are able to purchase more comprehensive coverage going forward. And then lastly, When we looked at metal levels, we also looked at the small group market. So unlike the individual market, there has not been a shift to richer plans. There's actually been a shift to less rich plans, where we've seen the percentage of members in silver plans have increased about 3 percentage points, while the percentage of members in gold plans have decreased about 3 percentage points. Another item that's interesting to note is that there's only about 4%, in the small group market, only about 4% of these folks are enrolled in bronze plans, but if you look back at the individual market, there's a much higher percentage enrolled in those bronze plans. So now we're going to move on and look at what's been happening with premiums and cost sharing in New Hampshire for the past couple years. Okay, so this first slide gives a picture of New Hampshire average premiums over the last 4 years. So these premiums include both the employer and employee portion of a premium in the group market, and then they're before any subsidies are accounted for in the individual market. The average fully insured premium, PMPM, in New Hampshire increased 3.3% from 2022 to 2023. Now, when you look at the different segments, the individual market experienced very little change from 2022 to 2023, while the small group and large group markets have seen the increase. The small group increased 5.8%, large group increased 5%. The other comparison you can make is that the premium levels themselves in the individual market continue to be lower than what we see in the group markets. Now, based on the 2023 Employer Benefits Survey from the Kaiser Family Foundation and the Health Research and Education Trust, in 2023, average premiums in the employer market across the country increased about 7% for single and family coverage. So what we're seeing in New Hampshire is slightly lower than what was seen across the country in the group markets. And these premium trends that we're seeing in the group markets are more in line with what we've seen historically, like when we look at pre-COVID, back in 17, 18, 19, we saw group insured premium trends increasing in the 3 to 6% range. So these numbers are in that range, a bit on the high end. This chart looks at the change in the second lowest cost silver plan in the individual market from 2020 to 2024. So rates and rate changes for the second lowest cost silver are commonly reported as this is the plan that represents the benchmark plan that advanced premium tax subsidies are based off of, but this is only one plan in the overall market. So the change in the second lowest cost silver plan from 2020 to 2021, we see that big decline, again, due in large part to the reinsurance program that started that year. We see that decrease continue into 2022, which may be due in part to the further reductions that are part of the reinsurance program. And then when we look into 2023 and 2024, we start to see some increases of 4.7% and 3.7%. Now, across the U.S., the average change in the second lowest cost silver was about 4.1 in 2023 and 4.6 in 2024. So the changes we're seeing in New Hampshire are in line with what we're seeing on a national basis with these plans. So the premiums shown in the previous slides were all before any APTC subsidies were accounted for. So this slide gives an illustrative example of what a 40-year-old non-tobacco single policy holder in New Hampshire would pay for the second lowest cost silver plan and a median bronze plan in 2024 at various income levels under the current ARPA and IRA federal subsidies. So as explained previously, ARPA and then the IRA increased financial assistance to those who already qualified for subsidies, and then it expanded eligibility for premium subsidies for those who might not have previously qualified. $335 is the full premium for the second lowest cost silver plan in 2024, and $299 is the full premium for the median bronze plan. So that, as you see on the right-hand side, at certain income levels, that's where people are paying the full premium. But then when you look on the left-hand side, you'll see as the income levels go down, that's where people are going to be paying less and less for these plans. So at the far left, if for folks that have FPLs between 133% and 250%, they're going to pay somewhere between $0 and $46 for a medium bronze plan, and between $0 and $82 for the second lowest cost silver plan. So now we're looking at average cost sharing in the New Hampshire commercial markets. These bars represent cost sharing PMPMs, and then the numbers across the top represent the cost sharing as a percent of total medical expense. Member cost sharing includes costs incurred by members in the forms of deductibles, co-pays, and co-insurance. From 2021 to 2022, you can see there was actually minimal change in the average cost sharing for most segments. So the bright blue line to the dark gray, the bright blue bar to the dark gray bar. Then when you look from 2022 to 2023, that's where we're seeing increases in what the average cost sharing that folks are incurring in all segments, with those increases being between 9 and 11%. On the left-hand side, we have the individual CSR population. So these are lower income members, and they pay some of the lowest amounts in cost sharing, so about $77 PMPM in 2023, or about 13% of their total medical expense. Now, the individual non-CSR and the small group folks in the middle, they're paying some of the highest amounts in cost sharing at $125 and $130 PMPM. And then lastly, if you go over to the right, we see the large group self-insured segment. They're paying some of the lowest in cost sharing. They're paying about $60 PMPM in 2023. So everything we've been looking at up to this point was related to premiums or cost sharing. So those are the costs that fully insured employers or consumers incur directly. Now we're turning to looking at claims and utilization, and this is the experience that ultimately feeds into premium developments for the fully insured segment. So looking back, we see that the claim levels in 2020 were low due to the impact of COVID-19. In 2021, we see that those claim levels jump up fairly significantly due to things like return to care, pent-up demand, and all the COVID-related costs, treatment, administration of vaccines, testing. From 2021 to 2022, we saw fairly low trends. It was minus 2% in the individual market, 1.5% in the fully insured group market, and 2.6% in the self-insured market. So again, fairly low. Now that we have 2023 data, we can see that trend amounts have increased for all segments, with the highest in the group markets at 8.4% in the fully insured segment and 10.3% in the self-insured segment. Now, when we look at trends going back in time pre-COVID, so like 17, 18, and 19, we see annual trends in the group market in the 4 to 6% range. So these 2023 trends are higher than what we were seeing pre-COVID historically. So these next couple slides are going to drill more into what's happening in the group market in particular. So this slide takes the fee-for-service, small and large group fully insured trend, and it breaks it into two components, so utilization and then cost and mix. So utilization represents the number of services provided, and the unit cost and mix, it's a combination of changes in actual prices for services, but it also includes changes in any mix of services or changes in the mix of providers being used by patients. So as shown, the impact of COVID-19 has really caused dramatic changes in trends, especially in the utilization trends year to year. We see that really big utilization trend in 2021 as all these things are happening after the shutdowns in 2020. Then we see in 2022, it's actually a negative utilization trend. And then going into 2023, it's just in slightly positive. Now on the right-hand side with the cost and mix, it hasn't been as volatile, but you can see it has been going up in time. And now where we are in 2023, the cost and mix trend is coming in at 77.9%. So higher, much higher than what we're seeing on the utilization trend side. So in addition to higher payment rates being paid to facilities and providers, insurers also cited more expensive outpatient procedures, like more expensive surgeries that are driving up these mixed trends. Now the numbers across the top just represent a 2-year average of trends for 2022 and 2023. So you can see for those 2 years, the average trend overall has been 5.1%. And again, most of it's driven by cost and mix. So as part of the annual hearing data collection process, insurers provide average unit price changes or payment rate changes at the major service category level for the current year, and then also they provide us a projection into the next year. So this chart is an aggregation of all that data for inpatient and outpatient facility, which is in the dark blue, and then professional services, which is in the light blue. So this is showing across all reporting insurers in New Hampshire, average payment rate changes were lower when you go from 2021 to 2022, but then they jump up in 2023. And then when we look at projected for 2024, they start to come down again, and the 2024 projections look pretty close to what 2021 was running at. Multiple insurers noted that the rate changes for hospitals in particular for 2023 were some of the highest that they've seen in many years, with hospitals pointing to losses that they sustained during the pandemic and also the impact of increased labor and supply costs as the reasons for these higher payment rate changes in 2023. So now this slide drills into the trends at a service category level for the group markets. So similar to what we saw a couple slides ago, where the utilization trends have really fluctuated over time, these PMPM trends on a service category level have also seen a lot of fluctuation over time, the inpatient, the outpatient, and the professional. All medical categories experienced double-digit trends in 2021. And again, that's the result of all the impacts from the shutdowns in 2020 and the pandemic. In 2022, we saw a little bit more of a mixed bag. There's a negative trend on the inpatient side, a positive trend on the outpatient side, and then pretty flat on the professional side. And now that we have 2023 data, we can see all those trends have jumped up again across each of these medical service categories. Now, when you look at the right-hand side, pharmacy, those trends have actually been fairly stable and are coming down a bit into 2023. The numbers up top again represent an average of what's happened in 2022 and 2023. So when you look at this 2-year average, you can see that outpatient facility has had the highest average trends at 7%. So now this slide takes all that trend information by service category, and it's showing two different pieces of info. So the bar on the left-hand side shows the distribution of allowed claims by service category in 2023. So this distribution tends to be fairly similar from year to year. And in 2023, we're seeing that outpatient facility, as an example, in dark gray, that's the largest component of spend, and that makes up about 36% of total spend. So this category is going to include items like the costs for outpatient surgeries, emergency room, lab, radiology, and some of the drugs that are coming through the medical benefit side. Now, the right-hand side takes into account both how big each of these categories are and the trends that we've seen over time to quantify how much each of these service categories are contributing to overall growth in 2022 and 2023. So this shows, again, it's outpatient facility that's the largest driver. Outpatient facilities contributing almost half of the trend that we've seen during this time period. So while when you're looking at the right-hand side, while the percentages do change over time, but the fact that outpatient facility continues to be the largest driver, that has not changed in recent history. So now we're going to take a closer look at what's happening on pharmacy trends. The bars on the left-hand side represent pharmacy costs covered under the pharmacy benefit, or that's part of the traditional pharmacy spend. The percentages in the parentheses below each of those bars, that represents how much each of those categories represent of traditional pharmacy spend. Now, the overall pharmacy trend in the group market in 2023 was 5.5%. And this is slightly lower than what happened the year before at 6.9%, and the year before that it was at 8.8%. Now, looking at the specialty drug category, specialty drugs generally are high-cost medications that treat complex and chronic conditions and typically require some type of special handling. These drugs can show up either under the pharmacy benefit or under the medical benefit. So the specialty drugs that are showing up under the medical benefit, that's what we're showing on the right-hand side. And those drugs, by showing up on the medical benefit, it typically means they're being administered in a hospital setting or in a physician's office. So specialty drug trends under the pharmacy benefit, so more on the left-hand side of that bar, they were fairly high in prior years. They were 12.1% in 2021, 9.1% in 2022, but they've actually been fairly flat this year. It's only 0.6%. And all insurers generally saw lower specialty drug trends in 2023 compared to prior years. And insurers cited reasons such as increased rebates for these drugs and also just some more favorable morbidity of some of the newer members coming into their group markets. Now, when you look at the same data for the individual market, which is included in our report, you don't see this low favorable specialty trend. The specialty trend is kind of more in line with what we've seen historically. So specialty drugs, even with this lower trend in 2023, they still make up the biggest portion of overall pharmacy spend at roughly 54%. Now, looking back on the right-hand side, the pharmacy under the medical benefit, so those PMPMs have jumped around a little bit, but in 2023, we actually saw an increase of about 16% going from 2022 to 2023. So throughout this report, the pharmacy information is being presented net of prescription drug rebates, and rebates are the amounts that are paid to insurers or PBMs from drug manufacturers, and it reduces total pharmacy costs. So prescription drug rebates have continued to grow at a significantly faster rate than pharmacy costs, and in 2023, we saw a trend of 30.8%. In 2023, pharmacy trends gross of rebates, so on the left-hand side, was 11.9%, but once you take into account the rebates, we see that trend come down to 5.5% in 2023. So during this time frame, overall pharmacy rebates in the group markets have increased from $25 PMPM up to $48 PMPM, so it's almost doubled. About 56% of rebates were for specialty drugs in 2023, which is an increase from what we've seen previously. In 2020, that number was 50%. So this graph now looks at the distribution of member months for each of our insured segments, individual, small group, large group, by their annual allowed claim costs. So for example, on the left-hand side, the individual market, we see about 13% of members had no claims in 2023, 34.8% of members in that bright blue bar had between $1 and $1,000 in claims, and so forth. So the distribution by market segment is somewhat similar until you start getting to the highest spend levels, where the individual market had about 18% of their claimants with over $5,000, so those top three buckets. And then the small group and large group had about 22 and 25% respectively of those over $5,000 in claims. Now note that while members with over 5,000 in claims comprise only about 18 to 25% of the total members. So that's the combination of the light gray, the dark green, and the light green. They represent between 82 and 87% of total allowed costs for each of these market segments. And when we compare this data to last year, we are seeing there's more people falling into that over $5,000 bucket. For example, in the large group segment, we saw about 22% of members had claims over $5,000, and now we're seeing about 25%. Insurers were asked to report on primary care PMPM spending by market segment from 2021 to 2023. And similar to last year, the definition of primary care was provided by the New Hampshire Insurance Department to ensure consistency among the insurers. So we see that there's increases in primary care PMPM spend from 2021 to 2022, and then even further into 2023 for all of these segments. And the overall increase in the insured markets from 2022 to 2023 was 6.4%. As a percent of total medical expense, primary care represents 5.8% and 5.4% in the small group and large group markets respectively, and about 6.8% in the individual market. And overall, across the insured markets, primary care represents 5.9% of spend. So the 5.9% is fairly consistent with what we saw last year, where primary care as a percent of spend was 6%. Now, several states, including Rhode Island, Delaware, Oregon, Colorado, have requirements in place now for primary care spending, including a specific target or a requirement to increase primary care spending year to year. The last two slides in this section looks at some utilization data by market segment for two key utilization metrics: inpatient admissions and emergency department usage. So when we look at inpatient admissions, we see that there was a decrease from 2021 to 2022, and the largest decrease happened in the individual market. And then from 2022 to 2023, we see that inpatient admissions have increased in all segments, with the largest increase also happening in the individual market. Insurers stated what they were seeing in the individual market. They see that trend driven by an increase in deliveries and newborn admissions, but they also saw increases in musculoskeletal and nervous system admissions. In the group markets, we see the 2023 levels continue to be below where they were in 2021, despite the increases this year. And several insurers cited that part of the positive trend in admissions is due to the depressed levels in 2022, still as the results as the COVID-19 works its way through the system. In addition, several insurers cited that they've seen an increase in psychiatric admissions. Now, when we look at emergency department admissions, we see there has been a fairly steady increase going through to 2023. The individual market experienced the largest increase in this time period, while the group markets were lower. The small group markets are a 0.9% increase, and the large group markets are at 1.3, with an overall impact to the insured market at 3.5. The individual market continued to have the largest level of emergency department admissions among these three segments. And several insurers cited that they're seeing an increase in what they consider preventable emergency department visits for such things as digestive and abdomen issues as one of the drivers of these trends. So this last section looks at some medical loss ratio and risk adjustment information. So first, we're starting with the individual market, and we're looking at risk adjustment transfer dollars by insurer for the past couple years. So in general, insurers who have healthier members will pay more money, so that's the numbers shown in red, while insurers who have sicker members are going to receive money. So that's the number shown above that bar in the white or the black font. So in this individual market, Matthew Thornton Health Plan, or Anthem, they were assessed $27 million in 2023, and that's significantly higher than the past 2 years and still higher than 3 years ago. On the other hand, we see Ambetter or Celtic receiving risk adjustment amounts that are also higher than what they've received the past couple years. So as we were talking about previously, we've seen some large increases in enrollment in the insured market, along with a lot of shifting or changes in market share among insurers. So this is going to lead to some of this volatility that we're seeing in these results. Then we look at similar information for the small group market, and we see in 2023 in total for the small group market about $7 million was redistributed in the risk adjustment program, which is a little higher but fairly consistent with what we've seen the past couple years. And the other interesting observation to make here is that the total amount of money being redistributed in the small group market is lower than what we see on the individual market side. So on the individual market side, there's $27 million being redistributed versus $7 million in the small group market. So that's going to be a function of, it is partly a function of just how many enrollees there are in each segment, but it also speaks to there's just a lot more differences in the distribution of risk among the individual market carriers. These last couple slides, we look at loss ratios for the three insured segments. So here we start with the individual market for 2022 and 2023. And just to note, so this information is based on data coming through the federal MLR reports, but it's not meant to replicate the federal MLR calculation that's used to determine rebates. The federal MLR formula that determines rebates makes some additional adjustments, and in addition, that's based on a 3-year average. So these numbers are the same data source, but they're not meant to replicate that number. So the risk margin in the individual market has decreased when we look at these 2 years from 6% to 2%. And when we look back over a longer period of time, the risk margin in the individual market really has bounced around a lot. If we look back as far as 2017, there were negative risk margins in this segment. Then it jumped up to over 10% in 18 and 19. Then it fell back down in 20 and 2021. And now here we are seeing it at 6% down to 2%. So again, I think it speaks to the volatility in this market with just a lot of the changes that have taken place, the enrollment increases, the changing of insurers, changing of market share, and also the impacts of COVID-19. In the small group market, we see also that their risk margin has decreased, but not quite as much. It's gone from 5% to 4%. And we've generally seen more stability in the results for this segment. Along with, lastly, the large group segment, we've also seen a decrease in their risk margin. But again, we've seen more stability in this segment than we've seen in the individual market. So that brings us back to this summary of our key findings. So I won't reread these, but I'll just leave them up here so you can look at them again. And just to know, so this was just a subset of the full report that I believe is either currently on the NHID website or will be posted very shortly. So you can read through that, and it has even more information and context. I would just like to greatly thank the NHID for all your help with pulling this report together, and especially all the insurers in New Hampshire who provided all this data for us to be able to pull together.